Bitcoin going down, the dollar index going down, the stock market got basically also effed in the ass, and then potentially does this. This is something that we don't want to see on Monday. Yes, guys, it's not a joke. I fucked up. I lost a $2.5 million trade. There is something fundamentally broken right now with the crypto market and an aspect happening that I was not accounting for. And I'm gonna tell you exactly what's happening here right now and if we should be scared and potentially make some changes to our portfolio. Let's go. Guys, thank you so much for tuning in here on a Saturday. I'm feeling good, just up front, so I'm fine even if I lost the trade. I'm going to show you what exactly happened here in a second and the reason for that loss. We are starting off with the DXY chart. You see I have here at the same time the Bitcoin chart open. And why did I pull up both of them at the same time? Really easy, because I was looking at the DXY yesterday while we were dropping. I was like, oh, this is amazing. The DXY is going down. Bitcoin was here pumping slightly to the upside first in yesterday's candle before we got a massive move to the downside with the DXY together. Usually when the dollar index and Bitcoin going down at the same time, something broke along the way. Because usually when the dollar goes down, Bitcoin goes up, because it means that people put money in risk assets out of other assets, and that's why the Bitcoin price goes up. So, but if Bitcoin and the DXY going down at the same time, there is usually a world economic effect. There is war, other things happening, but usually when we get a war, the dollar index is going up, so which was not the case here. So I was wondering what's going on. Then I looked at the stock market, and maybe some of you saw this here on my Twitter account. The stock market was tanking also like crazy. Look here, Amazon almost minus 12%. Google minus 3%, Meta minus 3.3%, Nvidia 6%, JPM 2.81%. So the stock market got basically also effed in the ass a lot. And I was like, where is this coming from? This is not normal. Why is the stock market tanking? Why is the dollar tanking? And why is Bitcoin going down at the same time? And then I thought about it, and I remembered something that I have seen 2 days ago. And that was that the Japanese yen, or the Bank of Japan, raised interest rates for the first time in, I think, 8 years. In 8 years, for the first time, they were raising interest rates. And you see it here. Japanese central bank has raised its benchmark interest rate to around 0.25% from previously a range of 0 to 0.1%. Now you ask yourself, what does that have to do with Bitcoin? What does this have to do with the dollar index? Why does something that happens in Japan now have a ripple effect into other markets? So you have to understand, Japan was for roughly 30 years right now one of the cheapest countries in the world to have debt. What I mean by that is you get a credit with almost zero interest rate. So you don't pay any interest on your credit. You just pay your monthly installments. So which is nice. Imagine, depending on where you are in the US, in Europe, normally you get a credit at 1 or 2 or 3%. So that is your interest rate. So if you borrow $10,000, you have to pay $300 in interest. That's how the bank makes money. Plus that you need to pay your installment depending on how long your contract is. If you make a 100-month long contract, then it's $100 plus the $300 that you need to pay every year for the credit that you have taken out. So now in Japan, they were 0 to 0.1%. So it was really, really cheap to get debt in Japan. So what did foreign investors do? They took debt in Japan. So they took a credit in Japan and invested it in the stock market, gold, crypto, basically real estate everywhere. Why does that have now such a big effect on the market overall? So really, really easy, because people do stupid things when things are cheap. And what they did was they created another huge bubble that's about to burst. So they took on $3 trillion, 3 trillion with a T, not billion, $trillion in debt. So here the Japanese central bank has $750 trillion, yen, $4.7 trillion on the balance sheet. Much of its holdings are funded with interest-bearing deposits from private financial institutions. These currently total about 470 trillion yen, about $3 trillion, and the rate on them is about 0.1. So these $3 trillion, what has spooked the market, because now for the first time in 8 years, there is an interest rate hike on it of 0.25%. So that means they have to pay some interest on it. Now, 0.25% is for the banks. It is not for you. What happens if a bank now has to accept 0.25% in interest rates? What they're going to do? Do you think they're going to pay for it? No, they don't going to pay for it. They give it to you, to the client. They're like, we're not paying that. The client can pay for it. They took the money, not us, so the client took the money. The client is paying for this. Do you think they're charging 0.25% on the client? They want to make a profit. So what they're going to do is they charge you 1.25%, 2%, 1.5%, 1.75%, from before potentially 0.5, 1. I did not look really into the Japanese credit market, retail credit market, what the rate was for credit, but I guess it must have been really, really cheap. And now they have taken all the contracts with adjustable rates in it and starting to raise it. Now, what do investors do when this is happening, when they see, okay, here's now a rate hike? They get spooked. They're like, oh shit, now I need to pay interest on my credit. I took $10 billion, $10 billion. So now instead of 0.5%, I need to pay 1%. I cannot afford this. I spent all this money. I spend it on stocks, crypto, real estate, whatever, so maybe even on depreciating assets like a private jet. Who knows what they did with the money, so and they're like, oh shit, now I have to pay all this interest on that, on $10 billion. I have to pay now 1% a year. So that is for them a lot of money, so this is $100 million on $10 billion. So what they're going to do, that when they have to pay now their interest, they sell what they bought with, at least a small part of it, to cover the interest rate. They have now to pay the debt that they have taken on by this interest rate hike. So, and that has a ripple effect into the markets, where you see Bitcoin going down, the dollar index going down, and the stock market going down. So, and yesterday, I think yesterday or the day before, it was said that this was one of the worst days since 2008 in the stock market. Should we be scared about this right now? No, honestly, my mistake was, this was known for like 2 months, so that Japan is going to hike interest rates. 2-3 months ago, that was already written in stone that they are going to do that. And I did not think about that when it's actually happening, that people will put so much weight on it, because it was written in stone 2-3 months ago. So normally when you know this 2-3 months ago, you already are preparing for it. You take money out and just wait, so, but no, that just showed you how much degenerate people were taking credit, that they were sitting on the sideline and were like, okay, let's see if we actually get this rate hike, so maybe we don't get it, so then I can enjoy the party a little bit longer, so I will not take any money out, because then potentially I make a loss, and miss out on some profits if it's for some reason not happening. And then it happened, and then I was like, fuck, now I have to get out. Now I have to decrease my position to cover the payment that is coming to me. And that is what I underestimated, and that basically led to the drop in Bitcoin, and that led to that I lost a $2.5 million position. Again, I'm fine. It happens, it's not the first time. I usually make it back. I'm still overall heavily in plus in my on my portfolio this year, so I can stomach it, you know, so, but it's not nice. So here on the daily chart for Bitcoin, what is happening here right now? So in this massive bull flag that we are having here, I believe that this candle down here is a fake out, that we are below the dashed support line in that bull flag. By tomorrow, I expect that Bitcoin is trading here above that line again, potentially even today. We're not far away from breaking above it, like $200, and we are technically above that line here again. But on a macro structure, for the bulls being back fully in control, we need to get above that yellow line. What is this yellow line? So this yellow line is here the MDX volume delta point of control. So that is the point of control. If price is above the point of control, bulls are in control. If price is below the point of control, bears are in control. So currently bears are in control. This will only change if we get above $67,000, $66,900, that kind of range. So that is the level that bulls need to target right now to flip here completely bullish once again. Again, guys, if you want the MDX Algo Suite, then go in the description below. There is a link, 10% discount only with that link, guys. You know, so I negotiated that with the founder. You will not find this anywhere else. And that will also give you a lot of insight, you know. So when you see something like this, you're like, okay, we are now a little bit bearish. And then you start looking into lower time frames, you know, with other indicators on the MDX algo, and then you potentially find a nice entry to take advantage of that move here back to the upside. I'm gonna get into this here also in a little bit. Then I open a new trade here on ZoomX, this time a little bit smaller, roughly $10,000. So I'm trading here with $110,000 right now. Liquidation at $57,000. I don't believe that we go lower than 58. So I should be fine, you know. So worst case scenario, we come down to 58 to close the CME gap, but then we reverse back to the upside. Guys, again, if you want free money, especially in a drop like this, $10 can turn into a lot if you trade correctly. Take the $10 that you get for free on ZoomX just for signing up, guys. Just for signing up, you go to the rewards hub, you know, and claim your $10 and up to $45,000 in deposit bonuses with the link in the description. The CME gap, we potentially create one if we hold current prices. So if CME would be open, we would be like at $62,100 approximately. So there would be a small CME gap between where we closed yesterday and today. Tomorrow we're gonna actually see. And here is something what potentially can play out here. Like, remember, I said potentially tomorrow we are around $62,600, $62,800. If that's going to happen, we will not have a CME gap. So this will be not here. We will not get one. If we get one at current prices, we need to be careful when price comes up here and then potentially does this. This is something that we don't want to see on Monday. But I wanted to show you this because there is right now, because we are so close to that CME gap below us, that this can actually happen, to show you this scenario. Best case scenario is no CME gap. So that means we are opening where we closed on Friday and just keep going higher and ignoring this below. So, or we are coming up, closing this, coming down. This is not what we want to see, guys. Really, we don't want to see that. Here on the daily chart, also you see that big support cluster below us is still holding support, even though we broke into it. If we would have lost that, then we would definitely go close to the $60,000 mark here, because the next biggest support cluster below price, let me just show it to you, below current price, would have been here, and it would have been also really thin. So here, this is kind of like what you would have been looking at. So that is $60,200 to $60,600. Really small support level here if we would have not bounced at current levels. When we are watching then the inverse head and shoulders pattern, so this is now definitely nicely playing out here. Expect over the next couple of days, even though that we are going up a little bit, some sideways chop. So I think we are going here gradually sideways, something like this here, and then another leg, and then we wobble out. So this is most likely how price is going to move here over the next couple of days. That's at least what I'm going to expect. If that is not the case, if we would start to move lower here, it depends on how we move lower. If we move lower tomorrow, that's fine. We can move lower tomorrow, but we cannot go below $53,000. Do I believe that we are going that low here to take out current head of this inverse head and shoulders? No, I don't believe that. Also here, the left shoulder, we can also not go below the left shoulder. If we would, then we would also invalidate this inverse head and shoulders. I don't believe that we are going to see that. Maximum pain for Bitcoin to go down would be to fill this imbalance just here where we tapped on today. That was $60,600 to $59,800. So we could go to $59,800 in the worst case scenario if on Monday something crazy happens again. But otherwise, I think tomorrow is really, really important to see if we get a reversal candle here to the upside. If we get a reversal candle, we should be fine. That means that the candle of today marks the bottom, the local bottom, and we will then go up to complete the inverse head and shoulders pattern. In terms of our trade setup, I would still leave it as it is. Yeah, actually, that is still one of the safest entries. You could technically, guys, it's a little bit risky, so if you really wanted to, you could use here the low point of today as the stop loss, and then when we are breaking above 62,000, actually a little bit higher, what is this, $62,200, $300, $62,300 could become your entry to trade this to $67,800. But if you do that, be aware that we have here this upward sloping trend line that should now act as resistance. And when we come up here, you need to be careful. We could get a rejection. If we get a rejection, we go lower, even though it's quite unlikely that we would get rejected from here. If we break above that, continue to go to the upside, then just slightly below that will I be setting my stop loss. And you should do the same. Because just in case, if we roll over here for some weird reason, then you want to get stopped out slightly in profit. Because remember, here's also a supply zone from the MDX algos again. So that supply zone here, you see, we got here multiple times also rejected on the way down, trying to break above this here again. So you want definitely to be careful around this. So just in case that we come below that upward sloping trend line, that you get stopped out in a slight profit. If we don't get stopped out, then everything fine, and you keep raising your stop loss once we are breaking here that supply zone and going. Then on the liquidation levels, again, more shorts piling in here, over leveraged shorts, especially around the $64,000 level. Now when we go to the liquidation heat map, here's something interesting. If I go to the higher time frames, and that shows you where the directional move is going over the next couple of days. If I go here to the monthly time frame, was on a monthly and on a 3 months time frame, we could go like to $60,200, but then there's nothing until $59,500 and even below that. It is quite unlikely that we are going to tap into this liquidity cluster here. Clearing this liquidity cluster, like the little rest of it that's still there, we could do that. But you see here, the big liquidity is sitting at $70,000. And also when we are going here, I think it was on a 3 months chart, there you're going to see below us on a 3 months chart is basically not much anymore, unless we want to tap into $59,000. So and all the liquidity is above us from $70,000 to $73,000. So you see on a macro structure, Bitcoin should go up to take out all this short liquidity, because we have now taken out massive liquidity to the downside, where everybody already thought, oh, we are safe here with our longs. I was one of them. And now that all this liquidity is gone, there's only one direction, and the direction would be back to the upside. I don't want to, the Bitcoin dominance is raging, don't need to talk about this. Just quick Ethereum. Ethereum also looks like that we have bottomed out here at $2,900. Remember guys, I told you if we get below $3,000, you should start building positions here for Ethereum to the upside. We need to wait again for confirmation for tomorrow that we break above $3,065. If we do, that becomes a really safe entry where you can then add a lot of size to your position. Right now, you should just nibble, 10-20% of the full position that you want to build, but you can go full blown above $3,065. And that's it already for today's episode, guys. I hope you enjoyed it. I hope you learned something. I did for sure. And yeah, don't forget, smash off the like button, hit the subscribe button, hit the notification bell, and you see you then again, I hope with some profits tomorrow.